Hi, and welcome to CMS Forex News. I'm Christina Robinson, and today is Thursday, January 10th, 2008. Let's start from down under. The Australian trade deficit shrank in November to 2.3 billion Australian dollars as exports increased more than imports by 600 million Australian dollars. The narrow deficit adds to a collection of Australian positive releases this week. In a look at the Aussie-US dollar pair for the past 3 sessions, we can see that with the positive fundamental news, the pair has climbed from 0.87 to 0.8950, a rise of 250 pips. In the United Kingdom, November's trade deficit in goods matched October's figures of £7.4 billion. Exports and imports both rose by £5 billion, leaving the trade balance unchanged. The Bank of England did not surprise the markets and left its interest rate at 5.5%. This decision comes in the face of fundamental data that is showing a slowing housing market and poor consumer confidence in spending. However, the committee is concerned about inflation and decided to hold off, possibly until next month, before raising rates. The European Central Bank held rates steady as well, and President Trichet struck a hawkish tone in regards to inflation. The Governing Council is concerned about higher oil and food prices and inflation's climb to a 6-year high. The bank did not raise rates because the Eurozone economy is seeing some headwinds. Coming into the ECB interest rate statement, the euro-dollar pair was testing support a little below 1.465. Following the Trichet conference, the pair climbed 100 pips. It then extended those gains after Fed Chairman Bernanke said that the Fed was ready to lower rates in order to maintain growth. It fueled speculation that the next FOMC meeting may result in a cut of 50 basis points. The euro ended up having its strongest session in 2 months and was trading near 1.48 at 2 p.m. New York time. The euro-pound pair rose as well following today's news. It climbed 100 pips from a session low near 0.7460 and set another new record high at 0.7560. The pair had been in a 450 pip uptrend since December 19th. New jobless claims eased to a 2-month low of 332,000. Continuing claims fell by 52,000. Recent jobless claims and non-farm payroll data has indicated that the labor market was weakening to a degree that could push U.S. economy into a recession. Today's figures provided a bit of relief. Turning to Canada, November saw a 9.9% decline in building permits. This follows a poor housing starts release from yesterday. However, the value of permits for the month stayed above $6 billion, and the total value of permits from January to November set a new annual record. In a separate report, new housing prices increased 0.5% for November, slightly larger than expected. The U.S. dollar-Canadian dollar pair rose today as the combination of weaker Canadian building permits and better-than-expected U.S. jobless claims favored the greenback. The pair reached close to 1.015 before it came down following Ben Bernanke's speech. The pair fluctuated greatly during today's fundamental releases. Tonight, Japan will post data on money supply and business confidence. Overnight, the UK will release industrial and manufacturing production data. Tomorrow morning, Canada will reveal its employment report for December. Then, along with the United States, it will post its trade balance figures for November. And that's it for today's news. Join us again tomorrow here at CMSFX.com.